Hey, good morning. Today is May 25th, 2022. We're looking at a 2000 tick chart for the E-mini S&P 500 futures market. We have a 21 EMA here in blue, 9 EMA here in cyan, and a 200 EMA here in magenta. We also have a MACD indicator down here at the bottom. We primarily use technical analysis, price action, and overall market context in order to place our trades. Take a second, real quick, like the video, subscribe to the channel, turn on post notifications so you know exactly when I post these videos. And as you may have noticed, I added a nice highlighter to my cursor so that it's easier to see exactly where I'm pointing out things on the chart. Someone had posted a comment yesterday on it, so thank you for bringing that up. I want to try and make these videos as clear, concise, simple as possible. Now, I hope that you guys had a good trading day. I had a phenomenal trading day. I finished 2-0 for the day, but both of my trades had runners. You really just had to stay patient today. I'm going to be honest, there weren't that many setups. You really had to be patient and stay away from trading anything in the chop that we usually get. We've had it the past 2 days. We had it today as well. But if you're patient enough, there are a few potential trades that you can take and make some solid money. Again, you only need 1 or 2 trades, and if one of them have a runner, then you're golden. So let's get right into it for today. We'll make it nice, quick, easy, and simple and go about our days. So the way we normally start on this channel, we draw a level of resistance here at overnight highs, level of support down here at overnight lows. And with the prices that were trending up here, I just continued a uptrend from the day prior. But realistically, it didn't really play any role in how I analyzed pre-market hours. Prices were trending down. We had this channel working break, potentially looking for a new low. But after we had this break, we had a lot of consolidation. So as the market started to open, I drew somewhat of a two-tier trading range here. We had prices trending on bottom, then prices came up, started trending on top. Market opened, resetting the count down here. Prices came up and down for a first entry short. And as prices are coming up, what are some of the things we're looking for? We're looking for separation between 9 EMA, 21 EMA. We're looking for positive momentum in MACD to start. Prices were coming up to this 200 EMA, but then quickly pushed past it. So when we realize that prices are not respecting this 200 EMA, we're more likely to trade long above this position. Overall market context, as we look at it, prices were trending down, finding a level of support, and now we're pushing back up, most likely going to test the top of this trading range here. So those are some of the things we're looking at. We have this new low, prices come up and down for a first entry short. This is the first leg. Then prices start that second leg. It's on its way up. And all we're looking to do is catch stops at this point. People are going to try picking tops. People are going to try shorting, thinking they have enough room to the EMA, and not realizing all these bullish indicators that are showing us prices are going to continue up. So we wait for prices to trigger that second entry short. There are people that are trying to short this. Where are they putting their stops? 1 tick above this signal bar right here. So I had my buy limit order in place 1 tick above the signal bar, and as prices reversed, I was in this trade. My stop loss is going 1 tick below this signal bar here. So I got somewhat worried here. As this bar formed, it came back and scared me for just a second, but then prices reversed and I was in and out for the scalp. But again, as long as you have a stop loss strategy in place to protect you from nasty trades, you just got to stick to the rules, put your stop loss where it's supposed to be, don't be moving it, but we catch those stops and we ride the momentum up for a scalp. Now I got a scalp and a runner here, and so I think I came out with a 6-point runner off one contract. Prices eventually broke this channel that was working up, and then they were consolidating for a bit. Again, can't take any trades here. So once prices consolidated for a little bit, they tried pushing back below this EMA, pushed back up, came back all the way down, finding a little bit of support off this 200 EMA. I started to draw on a range here. I thought, okay, prices could continue to range for a bit. We're not getting the separation we like between the 9 and 21 EMA, so prices are not trending. We're not looking to catch stops in this area. A lot of overlapping bars. 21 EMA is flattening out, very clear to see. We want to draw this range in a way where the 21 EMA, 9 EMA are oscillating near the midsection. That's how I like drawing my ranges. So as prices continue to oscillate in this trading range that we have prices that are working from the lows, trying to make it to the highs, coming back down to the lows, attempting to make it back up to the highs. Now, this was not a trade I took, but I did manage to see it after the fact. We have this new swing low here. Prices come up for a first leg, down for a first entry short. Prices come up and down for a second entry short. We're not looking to take any trades here, but what I did was I resetted the count starting from this point. Prices came up and down for a first entry short. Prices came up and down for a second entry short if it triggers below this doji bar. Prices came down, immediately reversed. If you're going to enter this, you're entering 1 tick above this doji bar. You'd be in this trade and out for a scalp as prices make it to the top of this trading range. At the time, I was seeing a fairly flat 21 EMA. I didn't want to take any trades here, but after after the fact, you can see the separation start to form between 9 EMA, 21 EMA. Additionally, down here we have the crossover of the MACD moving from this bearish momentum, crossing over to the more bullish momentum. So you've got some indicators on your side to help you out. You're not looking to go short into this 200 EMA that's starting to come up and give us that support. So we're looking for reasons to go long. Plenty of space back up to the top of this trading range. That's where I would have gone long. Now we do have the short-term trend that's working up with a break, looking for a new high. So we have a new swing high here. Prices come down and up for a first entry long. Then prices come back down, test the 21 EMA one more time. Looks like a higher low by one tick here. This is an aggressive trade. You could potentially enter a second entry long here, looking for the new high, but I stayed out of it. I didn't like the way that bars were a little bit congested here. It's aggressive, but it's a second entry long, higher low opportunity that pops and you would have gotten a scalp. Now at the time, you don't have this channel here. So realistically, what are you looking at? This is really what you're looking at. You have this short-term trend working up, break looking for a new high. You don't necessarily have all that much room to the highs of this trading range. But if you're fairly confident that we're making higher highs and higher lows as prices move up, you could potentially take a risk on that trade. So prices continue to move up. Moments of consolidation, waiting for this 21 EMA, 9 EMA to catch up. I also saw the MACD thinning. I didn't want to take any trades in this area. So prices continue to hold this channel. We're pushing above the overnight highs that we marked earlier. And now this really would be an aggressive trade. I was restarting the count right here where prices were holding on the support level of this channel. Prices came up and down. First entry short by one tick. Prices came up. Next bar prints down for a second entry short. If you're looking to catch stops, you'd be entering one tick above this signal bar right here. Now the issue is prices have been trending up in this channel for about 20 minutes and it really grinded up. It was not a quick move. It was very grindy working up. You can see we're not getting the oscillations that we like on the MACD. MACD really is thinning out. That's why I marked it as an aggressive trade. As more bars continue to print, you might have a slight loss of momentum here on the MACD, but if you decide to take a trade here, you're entering one tick above this bar, your stop loss is going one tick below it, and as prices come up, you'd be in this trade. Prices come up to 7.50, so that's 9 ticks before prices reverse. Again, it's aggressive. It does work out if you were to take it, but really it's better to just be patient. You're already pushing above the highs. You have to be careful about trying to go long after you're breaking these highs for the day. The other thing to mention with this channel is as prices continue to push higher, notice how the midsection of this channel is holding. Prices are not working up to the top of this channel, and so that could be telling us we have a loss of momentum trying to go long. So when prices break here, there really isn't much of a surprise. We have a short-term trend that's working down, and my bias at this point was I was looking to go short. We're pushing up above these overnight highs, looking to go back short. So when we look for reasons to go short, we have this new high. Prices come down and up for a first entry long above this bar, then prices come down and up. Second entry long triggers above this bar. I had my entry order one tick below, but as prices came up, we got a close above the 9 EMA and 21 EMA. I took my entry order out of the market. I wasn't looking to go short there. But with this short-term trend, you have a break, potentially looking for a new low. If you treat this as a lower high, it's holding off 21 EMA. You'd also be going short at the highs here, but MACD is also showing a loss of this bearish momentum. You have to be careful. I mean, if we had a little bit better of a signal bar, and that's what I marked here. If we had a little bit better of a signal bar, you could potentially enter here, but it's just too aggressive. I wouldn't try trading that. If for any reason you still had your entry order here on this trade, you would have scalped out. But according to the rules, if we get that close above 9 EMA, we're pulling our trade from the market. We can't stay in those trades. Now, after the short-term trend breaks, we get this new low. Prices are coming back up to test the EMA. I'm hesitant about going short. I don't want to take any second entry shorts because this downtrend just played out. Additionally, when you look down at the MACD, you can see we're losing that bearish momentum. So prices could push back up and make the high for this broken channel that we had. But we don't get that. Prices continue to oscillate in this trading range, and I really was close to calling it for the day. I didn't like any of this. I wasn't interested in trading any of it. But as prices continue on here, this is kind of what I like to see. I like to see separation between the 9 EMA and the 21 EMA. Once I start seeing the separation, maybe I'm peaking down at the MACD. This next bar prints, nice strong bearish bar. This is my thought process at the time. Prices could be trending. We restart the count where the trend starts. So this is where I analyzed, this is where I saw the swing high. Prices come down and up for a first entry long. And as prices are coming down, I'm looking for a second entry long to trigger and go short. Increased separation between the 9 and 21 EMA. MACD is starting to build that bearish momentum. Prices are not able to push up above these overnight highs. So where are prices most likely to go? Down to test the bottom of our trading range. Next bar prints, and I have an order ready to go short. Additionally, the 9 EMA is about to cross through this 200 EMA. 21 EMA is on its way as well. Prices initially came up to trigger the second entry long. I put my order one tick below this signal bar where everyone has their stops. Everyone that's trying to go long here, their stops are one tick below the signal bar. And then as prices reversed, I was in this trade and out for a scalp and I had a runner. Now, initially, I was worried about going short because of a little bit of fighting here at 200 EMA. But once prices pushed through and told me, hey, we're not respecting this 200 EMA, that's when I felt very confident about going short below this signal bar. I had a runner in place, and the way I was playing it was I was putting the runner one tick above the previous bar. So as prices came up here, I was stopped out of a runner. But that was my second and last trade for the day. I was trading live with someone at the time here, and I was literally calling out exactly as I saw it. So to see it play out the way I called it was a very good feeling, and I'm glad I got that scalp and runner to finish off the day. Now on days like this, by no surprise, all this chop here, you don't want to be trading any of it. You definitely want to wait till prices start to trend. Now depending on how you counted this, maybe you counted this as the swing high. Prices came down and up first entry long, prices came down up for a second entry long, entering your entry order one tick below the signal bar here and catching stops as it comes through. But that might be a little bit of a stretch. I would probably reset the count right here. So I'd see this as a first entry long. But looking back at it a little bit, you can see we have a trading range, somewhat of a short-term trend working down, break looking for a new low, first entry short, second entry short off 21 EMA, 9 EMA, 21 EMA are both separating. MACD is showing a little bit of bearish momentum here. Maybe if you see this in the moment, you could take a second entry short here, again, anticipating for prices to move down. So you could get a scalp and potential runner there as well. But anyway, it's 11:35 Central Time. That's where we're going to end today's video. We got FOMC meeting today at 1 o'clock Central Time, so that's in a few hours here. On days like this, it's really important. You got to be patient. Don't trade in this chop. Don't think you're going to outsmart people. You're going to get chopped up and it's going to hurt. You'll win some, you'll lose some. Just try and find when those prices are trending. That's when you're going to get some nice setups. Don't forget to like, comment, let me know how these videos are helping you. Subscribe, turn on post notifications, and I appreciate all of your support. I'll see you tomorrow.